Speaking of mama, let's talk about the twin elephants in the room, Apple and Amazon, both of which are selling off in after-hours trading in the wake of some, what I guess, look, I don't mind saying not so hot numbers. With Apple, I mean, even though we're going to put some asterisks there, so don't get upset, because you know I like these. With Apple, the problems are obviously temporary. They took a $6 billion hit, what they would have made, so to speak, because of supply chain woes. They can't get their hands on enough semiconductors, just like everybody else, which is why their phone and accessories business came in weaker than expected. They can't make enough of this stuff to meet the demand. CEO Tim Cook said it could get worse in the fourth quarter before it gets better, which is not what we wanted to hear. That said, he also told us that in terms of semiconductors, we're seeing some major improvement as foundries in Southeast Asia come back online after getting hit by COVID. Still, Tim did tell me that while he still expects record quarters, that shortage could get worse. So why would I still like Apple? I mean, let's see. The revenues didn't beat, and he's talking about the next quarter maybe not being as great as I wanted. Well, the good news is Apple's an amazing brand, okay? Its brand is business deferred, not business lost. Hence why the stock's not being obliterated in after hours, and it's just rolling back a little more than today's gains. People understand. People are somewhat forgiving. Now, you know my position on Apple. Own it, don't trade it. That hasn't changed, and supply shortages will be cured. We just don't know when. Analysts are impatient beasts, and I expect to see downgrades tomorrow morning. I am sure some will go buy to hold, hoping to get back in again lower price. We don't play that game for the charitable trust. I don't think you should either. Remember, it's a supply problem, not a demand issue that matters. If it was demand, the conversation would be quite different. Or the soliloquy. How about Amazon? All right, they're getting hit by shortages and rising transportation costs, too. But on top of that, the retail business is decelerating, in part because it's up against some very difficult comparisons. Management's guidance wasn't great either. However, the Amazon Web Services business is on fire. In the end, I think the problems here are temporary, too, just like with Apple. I would tell you that if this stock were up 50% for the year, I'd just tell you to sell it, probably. I'd be more concerned. Maybe you can get it lower. But as I'm telling you, investment club members, well, it's only up 5%. So, I mean, the market pretty much anticipated not so stellar quarter. And that's what you got. The bottom line. I learned a long time ago something that I think I have to share with you. It was don't bet against mama. Nothing tonight has changed my mind.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.